Pension funds have been making huge changes to their allocation, and this is not a good sign for stocks. The stock market needs these billion-dollar investment funds to maintain their investments within the stocks, or else the central banks will have to fill in. That's not a good sign. You came here for the truth, so let me unveil that for you. Today we are going to talk about pension funds. Let's begin. Now, the pension funds are a big issue, something that I cover regularly here on this channel because it hurts people. It really gets to them when we talk about their future, their livelihood, what they're relying on a few years down the road. And unfortunately, as this picture depicts, they're heading for the iceberg. The California Public Employees Retirement System, the largest U.S. pension fund, is considering more than doubling its bond allocation to reduce risk and volatility as the stock bull market approaches 9 years. Essentially what they're saying is that we've had a good run. It's looking like it's getting a little bit risky at this time. Let's change our allocation to what they believe is safer bonds. Not my opinion, but anyway. And so we'll change the allocation, meaning we'll sell these stocks, buy bonds instead. Now that is interesting. We're not talking about one investor, even if it's a big investor, deciding to take some money out. We're talking about the largest U.S. pension fund. It's massive. CalPERS is looking at a menu of options for its fixed income target, ranging from current 19% to as much as 44%. Equities could be cut to as little as 34% from 50%. Stocks were the best performing asset class in fiscal 2017, returning almost 20%. The markets have had a good run, and they're thinking of maybe selling, taking their profits. Okay, now that's any good investor would do that. You want to take profits at some point. Definitely. In the short term, however, if the stock market starts to dip, maybe it's 2%. Then maybe that triggers a few algorithms. It goes 3%, 4%, 5%. And then you have a torrent. The market has not declined by even just a few percent in the longest period of time. So doing that would be triggering a lot of these computer algorithms. We have to be very, very careful to see this. All it takes is a spark. All right, next one. Japan makes plans for pension fund to invest in stocks. Divisions emerge over the plans to let the $1.1 trillion public pension fund buy and sell stocks. Now look at this. Japan's government is preparing legislation that would allow it to buy a $1.1 trillion public pension reserve fund to directly buy and sell stocks, a plan that is sparking divisions over the state fund's role in private markets. Think about that. They could just go out there and buy and sell as they wish. We're talking about $1.1 trillion. At the same time that CalPERS is saying we're going to sell, Japan is saying we're going to buy. Now, Japan owns U.S. stocks and debt and everything else. They also own their own. They own most of the ETFs out there. I think the number was over 3/4 of the ETFs. They own their own debt. They own their own stocks. It's a joke, but it's coming at a time now where the US is going to need somebody to fill in that gap, especially if you see the central banks start to reverse their balance sheet. I think it's possible that they can actually reverse their balance sheet as long as another central bank or another major institution that could be able somehow to afford this, as long as they fill in, then yeah, the Federal Reserve can pull back. as long as they essentially equate to each other, there's no cause for concern in terms of what we're seeing in these fictional markets. So it's interesting to see how these two work out coincidentally, I assume, at the same time, but the net effect will be essentially status quo. Now, what's happening with these pension funds is a major risk to the average individual. Imagine, they work their whole lives and they've been putting money into these pensions knowing that it's going to be there for them when they hit 65. And then, unfortunately, in some cases, it goes from 65 to 67, and then 67 to 68. And then they tell them, well, we told you were going to get this much, but, you know, it's hard times. You're not going to get all of it, but you'll get most of it. So don't worry. And then the people are saying, well, what can I do? I mean, there's nothing I can do. I can yell and scream and nobody's going to listen to me. So I'll just take it. I'll take what they give me. And then a few years later, there's another crisis and they go again and again and again. There's nothing left. There's no money in these pension funds. Stocks have been increasing year over year over year. And yet the pensions, in many cases, are going bankrupt. Don't believe what they tell you. These pensions, these investment funds, the banks and the central banks are all in it together. I've shown you before the collusion. I've shown you these charts. I've really documented that very well here on this channel. The revolving door and everything else. It's all one. So surely they're working together, they meet behind closed doors and even in public as well, sharing their plans sometimes. And what we are going to be left with isn't very pretty, I assure you. That's all for this video. If you found it informative, then please give me a thumbs up. Last but not least, if you found the video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.